Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me for this segment, we have Federico Ranero, CEO of Draiver, to discuss the impact of AI on the ever-evolving automotive industry. Federico, it's great to have you with us. Welcome to Trade Talks.
Jill, it's great to be here. Thanks for having me.
You got it. Why is advanced AI so valuable in the transportation industry and specifically in auto retail?
Look, taking a step back, in the US, there's over 100 million movements of vehicles annually, and all of them tend to be marked by a lack of efficiency and transparency throughout. Now, whether you're an OEM, an auto retailer, or a fleet management company, among other things, you're in the business of moving cars around. And the reality is that moving those vehicles is really complicated. We like to say that what Amazon Prime is to packages, we're to vehicles. And a lot of the magic that happens on the back end that customers don't even notice many times is aided by AI. And I think that the best way to bring this to life is to go through an example step by step. Think through a scenario where we, through our system, are executing a vehicle movement. I'm a driver taking a vehicle from A to B. When I arrive at B, the question becomes, what is the next best action for me as a driver? And AI is enabling us to suggest those actions in the most efficient way. It could be a driver within the system on the way picking me up to take me to the next location. It could be dispatching an Uber to relocate me to the next location. Or it could be deciding to keep me there for 15 minutes because there's anticipation of another vehicle being available for me to take to the next spot. All of this complex trick architecture in the backend sounds really simple. And for all that matters to customers, it's magic. But AI is enabling us to execute that in the fastest and most efficient ways in really manners that we didn't imagine before.
What does Draiver's technology benefit the automotive industry as the industry evolves?
We take pride by the fact that many of our customers actually call us the easy button, right? Our solution is that magical. Our technology is able to pull requirements from various customers across various industries, thousands of movements a day, millions in years, and then execute that complex trick architecture to do those movements in the fastest and most efficient way. We not only do that architecture, but we dispatch to the drivers based on the customer's requirements. Look, it could be an employee driver, right? Or it could be one of our over 20,000 independent contractors in our pool of marketplace drivers that are vetted, that are fully insured, that customers can group and classify based on their characteristics to decide based on certain rules who is the most efficient driver able to do this specific type of movement, be that customer facing or lot to lot and whatnot. So we're a trusted player for major players in the industry, from trucking companies like Penske, Morgan, Merchants Fleet, or OEMs like Ford and Fiat, or many auto retailers that trust us to execute those moves through our technology in the most efficient way.
Is the risk of relocating cars a common problem beyond the US?
Excellent question. It is very much a global problem. And being a car operator myself, a former CEO of Kavak, the largest used car market retailer in emerging markets, I really learned this the hard way. When you are operating vehicles, time is money. Many times, before you even sell a vehicle, you have to move it 4 to 5 times. And then you sell the vehicle, and the after-sales process is greatly facilitated by your ability to do pickups and drop-offs on demand. And there are tons of risk associated with executing this well. The nature of these movements is that of peaks and valleys, right? It's even hard for you to staff at the appropriate level to optimize for SLAs or economics, let alone to control the many risks that occur during those trips, or to use that as an enabler to be very reactive in any part of town at any time of day for customers to be able to push a button and get a service. So yes, this is very much a global problem. And we've actually launched 3 countries outside of the US in this last year: Mexico, Brazil, and Canada, with many of our customers demanding that we do so in more countries, and we'll be there to support it as soon as we can.
So Draiver's providing jobs here in the US and in emerging countries. How are you creating more access for gig economy drivers?
I love the question. This is what I'm particularly passionate about, given my background as general manager of Uber in Mexico, the 3rd largest country in the time that I was there. And let me tell you, we take pride in having one of the highest satisfaction and retention rates in the gig economy. We are obsessed to become the most beloved way to earn for drivers. And there are specific reasons why our value prop is so strong today, and it would only get better. Let me provide a few concrete examples. Well, first of all, the main barrier of access is not present. Drivers do not need a vehicle to earn in Draiver. They are in the business of moving vehicles. And by virtue of so, they don't have all of the expenses related to the total cost of ownership of that vehicle. So they actually earn more money. On the safety front, this is very specific, a specific concern to drivers, particularly in emerging markets. Well, they're not moving passengers around. And the majority of those safety issues are interpersonal conflicts between passengers and drivers. And last but not least, they have a very precise predictability of earnings, meaning I'm a driver, I'm signing up for this chain where I'll move 3 vehicles over 4 hours. I will know exactly how much I'm going to earn for that period of time, as opposed to going online and seeing how many trips are getting and what price. Besides this, we're obsessed to continue to monitor and improve various things like technology support, but we really take pride in delivering the best value proposition in the industry for drivers to earn at their own schedule.
Mm-hmm. And finally, Federico, what should investors know about how AI will impact the automotive industry this year?
Yeah, AI, the pace of innovation in AI in the automotive industry is fascinating. We fundamentally believe that the players that will actually win in the long term in this space are those that are able to capture, to label, to process proprietary data at scale. And we have been allies for our customers to do that, because whoever has access to that proprietary data is then going to be able to put that to work in the models that are actually going to be available for everyone. So think of the vehicle lifecycle management process as it pertains on the depreciation of the vehicle, on the prediction of probabilities of failure of certain auto parts, on your ability to price that vehicle at a certain point of time or predict that in the future. Logistical movements provide you an opportunity to capture that data, be that in the form of, for example, a before and after photos aided by computer vision that give you the digital footprint of the vehicle, for you to populate the models or precisely detect anything that you might be able to use from a commercial perspective in real time. So I think this is a space that the investors should stay very close to, because we're only getting started, but I think it all starts with proprietary data, and the ability to capture that starts with enabling use cases where you're able to extract that data and plot those data points over time to use to your benefit.
All right, Federico, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Jill, great to be here. Thank you.